Right, let's get into it then. MinRes down 10%. 10% of a very large company today after their quarterly announcement. Trav, what's happening in the MinRes department?
Matty, 10%, it's a big fall for a major company like MinRes. And just to put it into perspective, that represents about $1.5 billion of market capitalization value. If you just look at the delta in the share price times by the number of shares, it's pretty substantial movement in a very large company. And we took a look at the quarterly, and I think there's two big stories baked into that quarterly. One is just to do with the Mount Marion lithium project. So that's the project that's just out of Kalgoorlie, about 30 kilometers from where I am right now. It's MinRes pretty much disclosed that there's been a delay in their expansion plans there. They're planning to double the production there, and they don't expect that to sort of come about now until mid-May due to sort of some labour force and accommodation issues. And I can certainly vouch for the accommodation issues in Kalgoorlie. It's very hard to get a bed in Kalgoorlie at the moment. Mining companies are at the stage where they're actually buying up houses and filling them themselves. There's a whole bunch of low-cost accommodation, donga styles, that are going to come online on the outskirts of town to support a lot of the construction work that's happening. And there is a lot of construction work happening in terms of mine development in and around the town. So I think Linus is set to sort of come off by mid-year, and when that comes off, that might ease things. But I think just as quickly as that sort of comes off, you might see some more ramp up of other projects as well. So, Mount Marion, though, it's an interesting project, and MinRes, they didn't exactly knock it out of the park with Mount Marion. I think originally they thought they were going to get pretty decent, spodumene concentrate grade or product spec out of it, and they're putting it out at 3.8% spodumene concentrate grade now, and that's versus the industry norm of a 6% product. So the product that they're producing there's a product discount, and don't get me wrong, at the current lithium prices, you're still getting really good money for that. But it is an intriguing project for that. And what we saw in MinRes' quarterly was they confirmed that 20% interest in Essential that they picked up, that was confirmed as being of interest by virtue of the fact that it can complement the Mount Marion project there. The second story is in relation to the mining services business of MinRes. They've ultimately lowered their guidance on the mining services volumes as a few of their contracts have now dried up. It's interesting to see from my perspective if that trend is going to continue or not.
How much would, if you're going to split up they've got their lithium business, they've got the iron ore business, they've got their mining services business. What is the split, the proportion of which makes up what of MinRes?
Yeah, it does vary a lot, that number. It varies pretty much depending on what your lithium price deck is as a broker. And I think at the very top end of bullish brokers for MinRes, you've got Macquarie, and they value the lithium business at about 63% of the combined group's NAV, with mining services at 20% and iron ore at 17%. And that's like 63% of the total business is pretty significant, given MinRes didn't even have a lithium business all that long ago.
So that's the net asset value looking forward. It'd be interesting to see if we just broke it out on today's numbers, what the sort of revenue is from each of the businesses. Also, on the mining services front, I think we should start digging into, once we've got this down packed, into the mining services business, your NRWs and McMahons and Parentis, and see how they're doing and how they sort of see the cost inflation hitting their businesses.